India's most anticipated IPO and the largest ever, Hyundai Motor India Limited, opens for subscription on the 15th of October and closes on the 17th of October. It's looking to raise more than 27,850 crore rupees, which values the Indian automaker at 1.59 lakh crore rupees or $19 billion. It's also the first automaker to go public in India since Maruti's listing in 2000. This is a company which needs no introduction. It's been in India since 1998, 26 years and counting. India's second largest passenger vehicle makers since 2009. Its overall domestic market share stands at 15%. Now, investors are excited because it gives them a pure play on India's passenger vehicle market apart from Maruti. You've got M&M and Tata Motors too, but Mahindra has a tractors business. Tata Motors has got the global JLR business. So Hyundai and Maruti are only the pure play on the India passenger vehicle growth story in India. Now, the issue is a pure offer for sale, which means the parent company, Hyundai Motor Corporation, the South Korean entity, will be looking to sell a little more than 14 crore shares, will raise more than 27,000 crore rupees and bring down their stake by 17.5%. There is no fresh issue, no money goes into hands of the company, but this is a cash-rich company. Now, the company's market share in India currently stands at 14.6%, but it has fallen from 17.6% in FY20. Now, there are two key reasons for the drop in market share. One, the company discontinued the smaller cars like Santro because they're focusing on SUVs, premiumization. And secondly, there's also increased aggression from Kia Motors, also a South Korean company, and increased market share from the EV offerings of Tata Motors. Now, market leader continues to be Maruti. Its market share has dropped, but it's still above 40%. The company is very keen to get back its market share, driven by capacity expansion, EV launches, new product launches. Well, no company wants to lose market share, right?
We don't want to lose market share. We want to get back the market share, and we will do everything possible, including new launches, including, like MD said, EV. Today, if you see, we do not have too much of a market share in the EV segment, but launch of these 4 products along with localization will help us to really grab some market share in the EV space as well. So we want to grow sustainably. We want to grow in a balanced way.
Revenues of Hyundai last year stood at nearly 70,000 crore rupees. Its margins are at 13.5%, largely in line with peers, but margins at 13.5% have increased from 11.6% in FY22, riding on the premiumization trend and increasing share of SUVs. So the average selling price has gone up. In fact, the contribution of SUVs to their volumes stands as high as 70%. As of this September month. Profits of the company last year stood at close to about 1,500 crore rupees, and in the first quarter of this year, revenues for the company grew by 4.3%. But revenues going ahead could see a bump up because the company is looking to add capacity. If you remember, last year in December of 2023, the company acquired the manufacturing plant of General Motors in Talegaon near Pune. Now, with this, the aggregate capacity will increase from the current 824,000 units by 170,000 units, which means capacity will stand at 994,000 units once the phase 1 of the Pune plant is completed, which is by H2 of calendar year 2026. And then phase 2 will further increase the company's capacity to, by 250,000. And that will happen only by 2028. So capacity is likely to see a big increase in the next 4 years, currently from 824,000 to about 1.07 million units. Now, the company says they're investing a total of 6,000 crore rupees in the Talegaon plant and a total of 32,000 crore rupees in the next 10 years, which is more than what they've cumulatively invested in India, and it shows the company's bullishness.
We are investing the 6,000 crore in the Pune plant, and also we are investing more than 320 billion rupees for the next 10 years. Right?
So we asked the management, right, how will this Pune plant impact the margins going forward? Because investors I spoke to were a bit concerned because they said that maybe the Talegaon plant has a higher cost structure and therefore margins could be impacted. But the management reassured me that the company is building in a lot of automation at the plant, and given the incremental volumes, it could in fact impact their margins positively over the medium term.
Look, when you compare with September, the inquiries, the bookings, the retails are very, very good. So I think it's very lot of optimism around it. Also, this is after many years that in October itself, both the Navratra, Dashera and the Dhanteras is coming. So I think this is going to be a bumper month.
EV is also a focus area for the company. Now, Hyundai entered the EV market in India in 2019 with Kona EV, and then they launched that Ioniq 5 model in 2023. But its market share is still at 1.1%. This is data from CRISIL, which talks about the EV market share. Hyundai stands at just 1.1%. The leader is clearly Tata Motors at 65%, MG is at 18.5%, and you've got Mahindra at 7.5%. So the company has a little bit of a catch-up to play. So how is the company going about it? Well, it begins with the EV Creta launch. Remember, Creta is the most popular brand, and EV Creta launch is expected in Q4 of this fiscal year, followed by 3 EV launches over the next few years. The company also pays a royalty to the parent company at 3.5%, which has recently increased from 2.3%. The royalty is paid for technical know-how, brand, and when asked if the royalty increases from current levels, this is what the CEO had to say.
So we believe that yes, it should be for a long time. We believe that it should not. There's no reason to change it. In the near future.
Now, wrapping up, Hyundai is being valued at nearly 1.59 lakh crore rupees or $19 billion. Now, the valuations of the company are about 26 times if you look at the trailing multiple at a discount to Maruti's 29 times. Even the forward multiple at 18 times, that's FY26 PE, is at a discount to Maruti's 23 times and M&M's 22 times. Now, Hyundai believes the IPO marks the beginning of the next growth phase for the company in India. So are you interested in this IPO? If yes, if not, please do share your thoughts with us.